Hello everybody, welcome back. Let's have a look at Bitcoin and we'll have a look at traditional markets. There's not a great deal changed. Traditional markets are the place to be, really. They're the ones who've got the strongest fix. They're the ones who've been the most reliable, even since the summer. But certainly throughout the autumn and winter, they're the ones who've actually done what they said they were going to do, and that's where I've managed to profit from, really. Crypto has basically been extremely weak, especially since FTX did their thing, which is unfortunate. However, it doesn't mean that we can't still look at it on a cyclical standpoint. When you think about 4-year cycle basis, we're close to either already printing a low or a low coming in soon. I can't really say that that's happened right now because traditional markets are still... Well, I'll show you those in a moment. Before we start, though, I am doing a Patreon tonight for anyone who wants to join. As much as I'd like you to join today, you might want to think about joining in the new year because Patreon's silly in the way that it likes to bill people. It bills people at the beginning of every month. So if you were to sign up today, you get billed again in a couple of days. So it might not be worthy of setting up a Patreon account with us today. It's £7.50 a month, and if you want to join, maybe think about doing it in the new year. And one last little, mindless shill would be this, because this is the last day that Bitsgap has the 30% off their annual subscriptions. So if you ever watched any of my videos about setting up bots or how I did the $1,000 to $50,000 bot journey, then you would recognize that I did that in 2020. That's when I spent 2 to 3 months ago of a sideways boring market trading alts to alts. And then the bull market basically took all of that bot profit up to extreme highs. Now, bots aren't like a magic money maker. There is a strategy to it, and that's why I've got, I suppose, tutorial videos about how to do it. But if you are interested in setting up an annual subscription, especially as we go into what would appear to be an accumulation next year, then sideways can be your best friend. That's what bots are for. Bots are most benefit to you in a sideways market. Bull markets, straight up only parabolic moves. Yeah, spot trading and whatnot is probably your best bet. But bots are designed for sideways markets. So have a think about that. If we're going into a boring year, 2023, and it's going to be largely sideways, then maybe an annual subscription to a bot program like Bitsgap is your best bet. So yeah, links in the description below. Anyway, that's enough shilling for one morning. Let's have a look at Bitcoin to start with. So Bitcoin's looking droopy. We all know that. There's nothing really bullish about this Bitcoin chart. We can't even consider this to be bullish divergence yet because we've not yet printed a new low. The new low would be below these points here. So we're talking mid 15,000s. We could see that soon before the end of the year. We could. The way that it looks right now, breaking down below the 16,500 area, does seriously sort of toy with that idea, and something on traditional markets and the FX markets would suggest that is a realistic possibility in the very short term. Really, everything I've been saying, I suppose, on these last few videos that I have made is about how the euro is looking to make one more spike high and then basically short stack from there, bringing it down by quite a fair bit, really. And obviously that would move the Dixie, which would move traditional indices, and that again, more or less ties into the way that crypto likes to move alongside Nasdaq and S&P. Anyway, boring, but it seems as though the euro and the yen are in control of all the markets. And I'm not saying that they control the markets. I'm saying that they're good indicators for what markets are going to do. But if we are going to focus on Bitcoin's chart, the 4-hourly, yeah, we've come down to retest this low here. This low is not exactly a neat low, but it's reasonable. We've got these two candle bodies here, this wick here. Now, if we're looking at momentum, there's nothing exciting. In fact, it's only the only thing we're looking at here is further downside, to be honest with you. The risk is still to the downside. We're testing these supports, but the risk on a momentum standpoint is to the downside. Let's have a look at the very short-term time frames. The 2-hourly. What does the 2-hourly say? Momentum coming down despite having bullish divergence. Bullish divergence on the money flow index also, but turning down on the MACD. So again, you want to hope that these supports do hold, because if they do hold, then great. We might have a bounce that maybe takes us back up into the $16,600, $16,700 zone. It's such a boring market. It's really hard to even want to try and trade this because there's really not much movement in it at all, and with conflicting signals, they're not even signals, with conflicting momentum, it just shows that the sellers have been washed out, the buyers are they're at home enjoying Christmas. It's basically just it's like Bitcoin and crypto is kind of in a coma, really, is how it feels, and it's okay to accept that for what it is, because if you were around even in the last bull market, the bull market started with a big bang in 2019, but then it really did just fizzle out, really. It's basically went sideways, to be honest with you. Went sideways for almost a whole 2-year period. There was big ups, there was big downs, but it wasn't fantastic, it wasn't amazing, and there was plenty of time where all crypto was basically just meandering and going sideways, and it wasn't an amazing spectacle of success for anyone. It was only when it really kicked in 2021 where it behaved the way that we expected it to. And I should say, despite the money printers being turned on, that was always going to be the case. That was always the prediction, that 2021 was going to be the year. That's what we were saying the whole time on this channel, saying that whatever it is you do, just focus on 2021 is where it's going to happen. We didn't even know that they were going to turn the money printers on. We just knew that was the cycle, that was the process, that was the goal, and that's what happened. So if we're going to sit back and enjoy another 4-year market, then we should also recognize that the last year, the last 4-year market cycle was effectively pretty boring for the most part. It really, really was. And you'll have to check it yourself. I mean, you can see it if you just zoom out on any coin, really. You'll go, oh, yeah, you're right. Yeah, look at that big, massive mountain in 2021. But if you just move the charts away from 2021 and have a look at the majority of price action from 2019 to, let's just say, December 2020, it was pretty much sideways, For the most part, it was sideways. We would make new highs, would come back down to where we started from. It's just the way it went. Anyway, right. So that's more or less what I'm expected to see for the most part next year. I'm expecting to see a bigger move at some point, but I'm not looking to see anything unbelievably amazing. A sideways market for all of everything. So Bitcoin, basically the threat is to the downside, and we are still holding on to this sort of support, but other than that, there's really not much for me to put any weight on ups or downs on this one. The sellers have sold, the buyers are at home, and then there's just you and me who are just watching it on the sidelines going, oof. It literally is like watching paint dry, and that's fine, because there is plenty of periods in crypto and Bitcoin's history where that happens. So if that's what's going on with Bitcoin, what's going on with traditional markets? So this is S&P on the weekly, sort of managed to, just like last week, rise from the support area here back up into the above 3,800, which is I suppose a decent area for it to have reclaimed. I'm not suggesting this is going to make its way back up to the top. I very much believe that this is all related to the way that the dollar and the euro are behaving. But we did speculate that this is like an intermediate zone where we might find a bounce. I've also said that I do think that there's a very good chance that this is the low for traditional markets. And if that's the case, then great. We might find ourselves moving up to the top of this range here, back up to 4,000. I remember telling people about that before. I said, everything bounced 2.0. And everyone says, yeah, what are you talking about? And then everyone went silent as we reached all the way back up to the predicted area, exactly as expected. But this time round, it looks good right this very moment in time. But my expectation is that the euro is going to decide where it's going to go. And although the euro is in an uptrend and it is moving up, I think that we're ready for a local high. Let's just say like that, a local high to be printed soon. The reason I say that is just that this has been dancing around this area now for quite some time. And even though we don't have bearish divergence or anything like that, we do have golden crosses on the daily and on the 4-hourly, and we've not retested them yet. We've been above the 106 for a while now, but I think it's worthy of looking at this candle body here, which is a fine spike and reaccumulated back on here. Looks like an accumulation to an extent, but I recognize this sort of behavior for what it is, and it looks like we're gearing up, maybe even today, for one more of these. a spike high, maybe reaching into the mid 1.7s, maybe even as high as 108. A new high basically where shorts will stack, and those shorts will bring it down back below the 106. Maybe it might be tame and we might make it to 105, or maybe it'll be a bit more dramatic and we make it down to the ascending triangle which we broke out from, which, you know, is also the 200x mention on the golden cross, which is about to form here on the daily. So I'm not looking for parity or anything like that. I can only start to talk about parity if we start to break down below. I'd probably say all these moving averages here. I mean, we do have an exponential golden cross in the making, but we do have a simple golden cross made here. And this was only just made yesterday, confirmed golden cross on the euro. So this in itself is bullish, but as we all recognize, the vast majority of golden crosses get retested to see how strong they are. They're not signs of immediate continuation and strength of trend. What they do represent is strengthening of trend. You're supposed to have the 50 above the 200. That's what you're supposed to have. That is exactly where they should be in a bull market or a market that's trending up. But it doesn't mean that it goes straight up from here. People like to think about golden crosses themselves as a signal, but they're not. They are a sign of strength and continuation of strength. Divergences of moving averages in the appropriate places. And if I see a euro which is continuing to go up, a euro versus dollar, obviously, that means that the dollar is going down, which often transpires to, you know, bullish indices, anything that's, you know, even commodities, anything that's valued against the dollar. So, long story short, in the very short term, it looks like it could be okay. We've got this golden cross. We've got, you know, we were yet to make a new high on the euro, which I think we'll make. But I do think that what happens is the euro spikes up, it gets shorted into, and then we come down to test any one of these golden crosses, either the one that's not yet formed now, which is about 104, or the one that's sitting at the bottom of the descending triangle around 103. And when that happens, if and when that happens, that causes a bit of a landslide for S&P, NASDAQ, Bitcoin, crypto, the lot, because it will reflect on the Dixie as dollar strength. At the moment, dollar strength is not the talking point. We're still seeing dollar weakness. Again, as far as my trades were concerned, I did all my trades here, didn't I? As I imagine some of you did, because I was made a big song and dance about the Dixie has topped, blah, 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 blah. We'll exit our positions at the 50 exponential, rah, 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 rah. We did all that. It was done. So now it's a matter of waiting for the next big swing, and I think the next big swing is going to be an invert of this, where we bounce from here, maybe up to 108. This is going to be given to us, you know, partially by the euro and how the euro behaves, and I would be viewing this more or less as a euro situation rather than the yen, which is how we managed to spot the top on the Dixie or get that epic short and those epic positions for traditional markets for that everything bounce 2.0 that we did. Anyway, I've been rabbiting along for quite a while now. If you made it to the end of the video, please comment. I need comments and I need likes, especially at this stage in the video, because it shows that you know, the retention of the video, that you've appreciated what you've seen, and maybe YouTube will promote my video to other unsuspecting viewers. Otherwise, you know, I hope you have a nice day. I'll leave it with you there. Enjoy the new year, or, you know, just relax, The charts, even though the euro to me seems reasonably clear that we're going to do something like this, rip. That's what I'm expecting to see from the euro over the next week or so. And then what that should mean for traditional markets would be something like this, rip, back down again, maybe to a new low, as the Dixie basically bounces and goes like this. That's what we're looking for. And for Bitcoin, we just don't know how it's going to behave, but my expectation is that it will probably bounce, probably crash. I say crash is the wrong word. But it will follow the euro. The euro is the leader of all of these moves. That's the one we should focus on. We're looking for something like this. And then it's like at this point here where we can get excited. Excuse me. We can either get excited or upset. And this is where I will start to get a little bit more, have a bit more attention to detail about what trades I want to take and where I'm going to, you know, what I'm going to buy, because it would be sort of like make or break for the next few months coming into next year, whether we hold this area or break this area. And it does sound oversimplified, but sometimes, that is more or less it. We're thinking about dollar weakness and dollar strength. And at the moment, the euro is a really good way to predict or to map that dollar weakness. Anyway, I am going to leave it with you there. Thanks for watching. Hope you have a nice day. Patreon, Bitsgap, Telegram, Discord, Twitter. Anything other than, my front door, you're welcome. Anyway, have a nice day. Take it easy.